Hey guys, this is Jeff, Swing Trade Warrior with WarriorTrading.com, back with our weekly closed swing trade recap. We have a bunch of trades from this week that I want to talk about. It was a huge week for swing trades. Thank God fall trading is back because I was getting pretty tired of the summer choppiness. Fall trading, we see a lot more volume come into the S&P. The broader markets are generally more bullish during this time of year as we head in towards the retail holiday season. We get our Santa rally. And so definitely looking to capitalize on the momentum as the market has broken the 200 level in the S&P or the SPY and looks to move higher next week. Whether or not that happens remains to be seen, but if it does, then we certainly stand a good chance of seeing a great bullish recovery over the next few weeks and couple of months before maybe continuing lower heading into the interest rate hike later on. So having said that, let's get into the swing trades for this week. I just want to remind everybody real quick, we have a 20% off everything sale currently going on at WarriorTrading.com. Use the coupon code FALL20 and you can get 20% off of any product that you like. As always, if you guys have any questions, feel free to email me, jeff@warriortrading.com, or hit me up on Skype, Swing Trade Warrior, and I also have a phone number down below. You can give me a call. I'm always happy to talk to people, whether they're subscribers or not. Love to talk trading, love to help people out. So feel free to reach out. Okay, the first trade I want to talk about from this week we took on Monday was on INO. This is Novio Pharmaceuticals. It was a biotech stock. I was looking for a recovery along with the IBB after the IBB had sold off. For those that don't know, the IBB is the NASDAQ sector ETF. And most biotech stocks we find will trade in step with whatever the IBB is doing. So taking a look at this chart here, we got long on this on October 5th, that's Monday, right here after we got our alert on the 2nd of October. So what we had again, scanner alert, we had a 4% move up on high relative volume, looking for an entry somewhere over the $6 area. Why did I choose the $6 area? Because that's the high of the day of the alert, or just below the high of the day of, just above the high of day of the alert. So we know that on small caps especially, stocks under $10, $20, those whole dollar numbers and half dollar numbers are going to hold a lot of orders. There's going to be an area of mental support and resistance. It's a psychologically comforting number, and a lot of retail traders will use whole dollars and half dollars. Because of that psychological comfort of using a round number, we're going to find a lot of orders there. So when looking to take this trade on the day of the alert, it hit a high of 593. We could have got long at 594 and been just fine, but I would rather wait until we for sure broke the $6 whole dollar number and got long at 605 on this trade. It popped up intraday to a high of about 624. Okay, the next day it popped up again to 624 but sold off as IBB came back down. So day 2 of this trade we ended up stopping out. We got out of this trade for a 10-cent loss. I had an order to sell that was about 3 cents above high a day. Didn't hit it. I was stubborn and refused to lower my order, and we let it come. I let it come against me, and ended up getting stopping out. You can see IBB has recovered the last few days, and it's back up to where we look to take profits at before. Excuse me. So INO was a small loser for us. Not a big deal. We use good risk management by cutting our losses soon and letting our winners run. And sometimes we run into the issue of not reaching the expected or desired profit target, and we end up leaving money on the table. And that's going to happen because we don't know where the top and the bottom is. So we have to stick to our rules. And my rule is on stocks under $10, I like to sell every 4 to 5%, and we didn't get quite to 4%, so I didn't get to sell, and it bit me in the butt this time. Ended up taking a small 1% loss, which is fine. But overall, by using the strategy, we remain profitable by clearly defining our profit targets and our stop losses, and we trade with a ratio much greater than 1 to 1 for our profit and loss, closer to 3 to 1 these last couple weeks. Next trade I want to talk about is on Momo. Okay, this was another trade that we took on Monday. A lot of trades this week. We took this one on Monday the 5th. after we, excuse me, on, yeah, Monday, no, yep, Monday the 5th, sorry guys, Monday the 5th, after the alert on Friday the 4th. So Monday came in here, we had this big 4% move up on high relative volume, and you can see we have this nice flagging pattern here with this ascending, it's kind of got an ascending looking base here, and we're looking for it to make higher highs and lower lows, and we're looking for it to break out past this resistance area and start moving back into this previous gap spot here. Now I realize it's filled the gap to the downside, but we can expect there to be some potential for a move up once we get back into this area. Unfortunately, the mouth of the gap here acted as resistance and it shot us back down. So again, this is another trade we stopped out on for a 25-cent loss or so. And we didn't get to the profit target we wanted. We got about 30 cents on this trade after entry. Again, I was looking for about 80 to 90 cents to start taking profits. So this was another loser for us early on in the week. It was not a good start to the week. The next trade I took was on ABCO. This was a short trade. Came off my scanner. All right, I'm not a biased trader. I think that the markets in general are biased to the long side overall, but personally as a trader, I'm not biased one direction or the other. I trade the setups and I trade the market conditions, and it keeps me from becoming too emotionally involved with what I think should be happening. I think we should be in correction. I think we should fail here. I think it should bounce here. I don't really worry about that. It's not something I lose sleep over. All I'm really concerned about is whether or not there's a good setup with a good risk reward, and that there's you know, some kind of room with the market where we can get a day or two or 3 or 4 if we're lucky trending in a trade. So I like my trades to be shorter term, and I like to see resolution instantly. In this case on ABCO, we got the alert again on Friday, October 4th, and we got short on this trade on Friday, October 5th. Okay, this is the day of the alert. This is just a flip of the strategy I was using before. We got a big 4% move to the downside on high relative volume. The next day, we break the low of the day of the alert, and we get short on this trade. Okay, we were short at like 42.02 on this, and we saw a move down to a low of just about 40.87. So we had a about a 2-point move here, a little over about a 1.5 or 1 3/4 point move here. We scaled out through the move to the downside here, and we stopped out as it came back up on this next day. So overall, this was a 2-day long, excuse me, trying to look at my stats here. This was a 2-day long trade for us, and it netted us almost a 2% win on a simple short trade that was purely based on technicals. Now, if I zoom this chart out, we can see that once again, ABCO here has bounced off of support and has broken out to the long side. Back here, this is November of 2014. It sold off, bounced off this exact same level a couple times, popped up, sold off, bounced off it again, and it traded above it for the last year. Here we are all the way in October. Fast forward, we have a sell-off. It bounces off that area again, and now it's acting as support for the 3rd or 4th time in a little over a year, and we have another move back to the upside. But we don't care. We knew that this was going to be a target area for us. We got in the trade before it broke down. We profited on the way to support. We covered our position, and now it's bouncing back up. This would have been fine to flip to the long side. Didn't do that because it does not fit my criteria for trading, for swing trading. So overall, though, this was, again, like I said, a good, fast winner. It was profitable for us instantly overnight. Next trade I want to talk about, TTMI. TTM Technologies here. We got this alert on October 5th. So this alert came out on Monday here. Zoom this chart in a little bit for us. Okay, so we have this big extended run right here, but we get the alert on October 5th on this big 4% move up on high relative volume. What are we looking at here on the chart? I see this big purple line. That's the 20 EMA. We got to close over the top of the 20 EMA just below a major resistance area. Okay, so this is bullish. It shows that even though we're headed to this resistance area, we're not afraid to be buyer. The buyers aren't afraid to come in. You know, we closed over the moving average, and now we're looking to reverse trend and test the next moving average. Okay, we got long on TTMI. at 667, and we saw a pop up to a high of, well, today it hit a high of 699, 698. So total of about 31 cents since the date of the alert. However, I played this one too tight. Again, this is my fault. The trade was good. The alert was good. Everything about this was good, but I got washed out on earlier in the week when bad oil report came out and the markets pulled back really hard intraday. It freaked me out, so I said screw it, I'm up 10 cents, I'm going to close my position. I had 5,000 shares. I didn't want to let it come against me after it was 15-20 cents up in my favor. Again, I was looking to sell in the mid 90s. I did not get it. I got up to a high of 91. My order was at 94. I didn't get filled on my order to the upside, so I ended up stopping out prematurely as it came back down during that intraday volatility back on October 7th. However, if you would have stayed in this, you would have had up to 31 cents of profit today without truly being taken out or ever testing our entry price of 667. Next trade I want to talk about is IRDM. Okay, this is Iridium Communications. Iridium Communications, we received the trade alert off my scanner on October 6th. Okay, we got long on the 7th. So we again have a 4% move to the upside on high relative volume. Okay, again, we closed up and over the 20 EMA, another same bullish indicator we had on TTMI. This shows us that we were looking, or the stock is looking to make a move to the upside when buyers are staying in control. We got long on this trade at the same price as TTMI at 667. Okay, we got long on this trade at 667. This is the same day that we had issues with the oil report coming out and faking us out. It ended up coming down and testing our entry price on the next day early on during volatility before ever moving up for us to give us an opportunity to scale out. So we're looking at a small loss on this trade here. Once again, I exited too soon, and today, after their markets recovered, shook off the oil news, it popped up and tested the 50 moving average at 697. So this was a 30-cent trade potential without ever truly triggering an actual stop spot. So my fault on this was I went too heavy on the trade. I couldn't give it enough room to do what it needed to do, and I played it too tight during the volatility. Now, you never know when something's going to come against you and be sustained and continuous move to the downside versus when it's just an intraday volatile spike one way or the other and everything recovers and closes back up in your favor. We never know what's going to happen, so we have to have a stop somewhere because we can't just watch it go down and down and down and keep saying to ourselves that it's going to come back. That's poor risk management. You'll never make it as a trader if that's how you trade. In this case, I did not use the proper location for a stop, and I wasn't able to give it enough room because I took too much size. I got greedy, and therefore I stopped out prematurely on what would have been a nice winner, another 5% winner here. So that's my bad. But again, this is another profitable opportunity had I traded it right. Really frustrated with myself at this point in the week. It happens to all of us. And then comes along NVAX. NVAX was a trade I took today on Friday. It was alerted yesterday. We took it today. So we had this big high relative volume move to the upside, right? High relative volume, biggest volume bar in the range. Move to the upside here, looking to get long. Looking to get long over the top of this candle here. The market opened and this thing sold off and it started running fairly quickly. Ended up getting long at 775. That's where I was able to get filled. So we ended up getting in a little higher than I wanted, but I like the strength of the stock and I like the strength of IVV, the biotech ETF for NASDAQ. This thing ran up to a high today of 808. So we had a total of about 33 cents from our entry alert on this trade. I did scale out at about 798. I got 24 cents on my 4,000 or 2,000 shares, and I'm still holding my last 2,000 shares from move back to the 850 area. 850 is going to be my target. Okay, why 850? Because 850 is previous support from back here in May of 2015. It acted as support multiple times, and we know that, again, previous support becomes future resistance, and previous resistance will become future support. So my target on this trade with my last half is going to be 850. We need the IBV to hold up, but either way, we have a profit stop in place now, a few cents over our entry. We've already paid ourselves on this trade, so this will not be a loser for us, barring some sort of major unusual circumstance. Okay, another trade we took, LEJU. LEJU hit on the scanner yesterday, and we got long today. Unfortunately, this was kind of a crappy trade. What I saw here was this nice little, well, it's not really a clean flag pattern here, but we have this nice little period of consolidation under the 660 area, which is previous 654 area, which is previous support, or excuse me, previous support back in late July, early August. So we know that it's going to be future resistance, right? We're trading above our moving averages in a bullish trend. We're tapping this just under the 660 area here, which is support. So I'm looking for a breakout over it. Okay, we did get a breakout up to 667, but intraday it sold off while the market remained relatively strong and other stocks remained relatively strong. So not sure why such weakness on this today, but we ended up getting stopped out at our desired spot, and this thing continued its sell-off, hit a low of 634. So no good, not in play anymore, broke the pattern. Sometimes they just fail, and we have to get out of their way. So we capped our loss. It was 10 cents on this trade, not a big deal. Looking for the next winner, which came to us in the form of Con. Okay, Conus Inc. CONN has been quite the storied stock. This thing has had a pretty incredible last year, trading in a major downtrend, gapping down several times, hitting a low of 1402 before reversing and climbing to a high of 44 in just about half a year's time. Once again, it reversed at the top there, and it's on its way back down, trading below its moving averages, and it's super weak. Okay, we get an alert on the scanner yesterday that this thing put in this thing put in a high relative volume move to the downside. We can see just by looking at this chart that we have a support area here at the 2330 mark. Okay, if I zoom out, what does that coincide with? Wow, look at that. Previous resistance will now become support for the stock. Isn't that amazing how that works? Once again, back here in December 2014, the stock price, after it gapped down, the high became the entry to the gap at the 2340 area. Once again, it gapped up and over and used that area as support. And it traded above that for quite some time until coming down and testing that area at support. Popped up off it, still down, looking for a breakthrough or breakdown under support here. We got short on this stock underneath the previous low of day at 2420, and unfortunately it didn't want to run for us completely to the downside. We were able to scale out intraday for a few percent win on this. Got about 60 cents out of this trade. Not bad. It was a nice winner, but it did end up reversing and intraday and coming back up, closing off the bottom. So once again, it bounced off this support level. Looking, if we have a weak market going forward next week, I would not be surprised to see this test the 2330 area and break through it. If that happens, I'll look to re-enter the trade for a move back down, potentially to the 19.5 area. There's really not a lot on the chart here, other than maybe 2150 or so, finding our next support area from the spike back in January. It's not really a strong support level. It's not as strong as the 2330 area that's been tested multiple times. Either way, another profitable trade for us. So all in all, it was a profitable week. Made a few $1,000. Wasn't a home run week by any means, but the trading has become a lot cleaner. If I wasn't such a goofball and screwed up my trades, I would have been in 2 more 5% winners instead of stopping out prematurely because I got greedy and took too big of size. So let that be a lesson to you. Stick to the rules of your strategy. Have a trading plan and execute them. I've been doing this for a long time, and I still make mistakes. It's inevitable. They're possible to avoid as long as we're humans. So other than that, those are the trades from this week. If you guys have any questions about those, or you want me to answer any questions you might have about other stocks, give me an email, jeff@warriortrading.com. I also have my contact info in the description down below. Hope you guys enjoyed the video and maybe learned something, and we will see you next week.